The collapse of Credit Suisse, one of Switzerland's most established banks, was announced recently after a series of financial losses and scandals. As a result, UBS took over the company for $3.23 billion, a deal supported by Swiss authorities who aimed to prevent a global banking crisis. UBS also agreed to assume up to $5.4 billion in losses suffered by Credit Suisse as part of the takeover arrangement. Why did this happen? Also, amid global financial turmoil, how have Indian banks cushioned the impact? Are there any lessons for European central banks to take from the RBI? I am Richa Dwivedi and this is NIJ Edit. Credit Suisse's financial woes began 2 years ago when it suffered losses from Greensill, a British financial firm that specializes in short-term corporate loans. In India, deposits up to Rs 5 lakh are insured with Deposit Insurance and Credit Guarantee Corporation. This means a depositor with Rs 50 lakh in a fixed deposit will get only 5 lakh rupees if a bank fails. However, the RBI has classified SBI, ICICI Bank and HDFC Bank as DSIBs. These banks have to earmark additional capital and provisions to safeguard their operations. The Reserve Bank of India has stringently followed the Basel norms for transparency and capital adequacy. According to experts, India's macroeconomic indicators are improving day by day, and it can stand out in this global financial turmoil. The RBI's Financial Stability Report, released on December 29, 2022, warned that risks from global spillovers and financial market volatility remained in the high-risk category. However, it also said that stress test results reveal commercial banks are well capitalized and capable of absorbing macroeconomic shocks even in the absence of any further capital infusing by stakeholders. Banking regulations in India are strong, and Indian banks must make provision for all unrealized market-to-market losses outside their held-to-maturity or HTM portfolios. Most private sector banks in India have a relatively small HTM portfolio. According to analysts and experts, Indian banks have seen a boost in their profitability in the recent past, thanks to the improvement in asset quality and robust growth in credit. Though it is expected that there will be some pressure on margins as deposit rates go up, banks are in a much better shape to cushion its impact. The collapse of Credit Suisse has had a significant impact on the global financial market, including India. Indian economy is confronting strong global headwinds, yet sound macroeconomic fundamentals and healthy financial and non-financial sector balance sheets are providing strength and resilience and engendering financial system stability. India's macroeconomic indicators are improving and its banking regulations are strong. India's banks are capable of safeguarding themselves on the back of strong banking regulations, and they are in a better position to cushion the impact of the rising deposit rates. Do let us know in the comments below if you found this video insightful. Until next time, this is Richa Dwivedi signing off. Dhanyavad and Namaste.